Alright class, now that we've already discussed how this class is going to go with the quizzes and the group work, we're going to go ahead and get into some balance sheet terminology. First, I want you to log into your Google Classrooms, and I put this PowerPoint in there so you can go ahead and take some notes while we're going along. Along with that, there's also going to be a link to the terminology quiz that you'll need to go through. There'll be another PowerPoint after this that's also in there. It'll go through the balance sheets, but we're going to go ahead and start with this one. So, a balance sheet is also called a statement of financial position. It is determined at a specific point in time versus over an entire year. So if you decide to do a balance sheet every year on the 30th of April, then that is your balance sheet. You can do a comparative balance sheet and compare, say, the year 2015 to the year 2016 and so forth. The balance sheet is one of the four main financial statements, for our balance sheet, income statement, cash flow statement, and statement of stockholders' equity. Those last three we will go ahead and cover in the next few weeks. So, the balance sheet is a report of the company's assets, liabilities, and stockholders' equity. You can see the accounting equation down here at the bottom. Make sure you take a special note. Assets equals liability plus stockholders' equity. So we're going to go ahead and break these down and go over exactly what assets are, what liabilities are, what stockholders' equity are, so that when you're given a word problem later on, after the one that we go through as a class, you'll be able to determine where in your balance sheet each of the items needs to fall. Assets. There are several different categories within assets. The first one is current assets, which is any cash or accounts receivable. Remember from last week, our accounts receivable are any invoices we've sent out to other companies and that they owe us within a timely manner of the balance sheet here. Investments are longer term incomes. They would be real estate and long-term investment. They are an asset, but it would take you longer to unload them, or they're set for a specific amount of time. Non-current assets, such as machinery and furniture, these have, they depreciate over time except for land. Make sure you remember that. Land does not depreciate over time like machinery and furniture do. Whatever your initial investment into these are, it may not be what you can sell them for later. You know, you buy a new car and you drive it off the lot and you automatically lose 10% of your car purchase or something like that. Intangible assets are those assets that you cannot see, but you do have benefits coming from them, such as copyrights, patents, and trademarks. Other assets would be like a deferred income tax. Say you do a balance sheet and you know you're supposed to be getting $2,000 back on your income taxes. That is an example of the other assets. Any questions on this? Okay, we ready to move on? All right. Your liabilities, there's only two categories of this. You have your current liabilities, which are any financial payments that you have to make within a year of a balance sheet. So if you have a loan that is coming due in this amount of time, that would be a current liability. Your non-current liabilities would be any long-term liabilities, which would be a mortgage, a car payment, anything spread out over a longer period of time. These have specific places on the balance sheet as well. Okay. The next one we're going to get into is stockholders' equity. Your stockholders' equity is money that needs to be paid back to the stockholders or money that they've put in. For example, capital. The original investment of stockholders when purchasing stock. Anybody tell me what that means? Okay, that's right. That is the amount of money that you would purchase a stock for, your initial investment. So, the next part is retained earnings, which would be earnings of the company minus the dividends that are actually paid to the stockholders. So, it would be your income over the course of an entire year, and then you minus that by the dividends per stock per stockholder, and you add all that together and you come up with your retained earnings. The treasury stock is an amount paid by a company to repurchase the stock. So that would be the amount that we have to pay each stockholder in order to get the stock back in our name. Any questions on that? No? Okay, I know it was a brief overview, but you have 2 minutes to complete this next quiz. So we're going to test your knowledge. Go ahead and click on the link in your PowerPoints on Google Classroom, and it should take you to this link. You have 2 minutes to finish, and once you do, if you've missed more than 2, which would be 80%, it's a 10-question quiz. If you've missed more than 2, we're going to go ahead and hit the questions that most of you have missed, because I can see your data here, and then we will review that before moving on to our breakdown of a word problem and our balance sheet. Okay? All right. 2 minutes starts now. All right, let's see. We had a few missed questions that we want to go ahead and cover. They're a little tricky. I worded them that way so we can make sure that you're understanding all the material. Okay, so the first question that we need to go back and cover, what are the 4 main financial statements? Tommy? Balance sheet, that's right. Income statement is right. Anybody help him? Cash flow statement? Okay. What's the last one? It was the last slide we just talked about. Statement of stockholders' equity. Very good. The other one, because some of you weren't paying very close attention, was the accounting equation. So everybody look down here at the bottom. Make sure you put this in your notes. Asset equals liability plus stockholders' equity. Okay, we've got that down. Very, very good. All right. The last one that we had a question on was a different kind of assets. There's quite a few of them, so make sure you go ahead and go back and review those. If you have any specific questions, you can put those in the message board and I'll answer them there, and that way everybody gets the answers more fully explained. We're going to go ahead and move on now to our word problem and breaking down how to determine what an asset, a liability, and a stockholder's equity is to put it into the balance sheet. These balance sheets are also in your Google Classroom. I need you guys to go ahead and pull up sample 1, and we're going to start our problem now.